once again to the second IVCA Impact and Sustainable Investment Conference presented by Eversource Capital and National Investment and Infrastructure Fund. Earlier today, we had a wonderful presentation and report presented by Vineet Rai of Avishkar Group, where he spoke about the decade of reckoning, looking at the 10 years which lie ahead and what we can expect in terms of impact investment. This session, we look back at the decade that was. What happened between 2010 and 2019 vis-a-vis the impact investment story of India. So to tell us more, we have a database presentation. This is being put forward by the Impact Investors Council and Asha Impact Report. Our speakers for this are Ram Rajpai, Chief Executive Officer, Impact Investors Council, and Aparna Dua, Senior Manager, Asha Trust. Over to you.
Thank you, Shutapa, and thanks a lot to IVCA for this opportunity for us to be here speaking on this important topic. Maybe can we just get the slides on? So essentially, as the slides are coming on, a brief about the IIC or the Impact Investors Council. We are essentially a not-for-profit industry body focused on building the impact investing ecosystem in India. We have about 40+ members, and we essentially focus on trying to see how we can engage and bring more capital into this space, work actively with government, partnerships with the government, and also have a very active research and publications division to kind of focus on that. So that's a quick brief on IIC. We'll quickly jump to the presentation. So maybe Shutapa, can we get the presentation on?
Sure. May I request Meghna from IVCA to kindly share the presentation?
Okay, great. So as the presentation is getting loaded, as I think Shutapa introduced me, I essentially head up the IIC. We have Aparna. Just stick with the first slide, please. Just go to the earlier slide. We have Aparna, who is a senior leader in the Asha Impact, one of the leading firms. This is our presentation today. Is really about the state of impact investing in India. And the study that we did broadly had, 2-3 dimensions. First of all, we wanted to look at the last 10 years and say, okay, what is it that's been happening in this sector over the last 10 years? That was one dimension. The second was, what is the nature of capital? Where is the capital going? Which sectors are getting more funding, and so on and so forth? That was the second dimension. And the third dimension, which is the important thing, is where is all this capital creating impact? What is the nature, the proportion, the depth, and the range of impact that is being created? So the study really tried to look at these 2 or 3 broad things. But before I get into it, I think it may be useful for us to briefly, touch base on the way we look at impact investing. And there are several ways in which people think about impact investing, but I just thought I'll take a second to talk about it. So essentially, impact investing is really about investing in for-profit enterprises with 2 specific intentions. One is to create social impact, and the second is to generate financial returns. Historically, we've always thought of these 2 as separate, where we say, okay, this social impact and this financial return. But what you're really trying to do in impact investing is bring those 2 together. And essentially, how do you do that? Is really by trying to solve problems of 2 issues, access and affordability. So anything which is trying to solve the problems of access and affordability for low-income customers. There is no use of us solving problems of access and affordability for the well-off. Idea is to solve the problems of access and affordability for low-income customers in a very intentional way. And that is typically, we try and do that through the venture building and early stage de-risking. So you use venture capital, kind of try and build the model. And as it de-risks, you try and see how can you get in commercial capital to focus on that. As the broad numbers say, and we'll get into some detail, you have about $11 billion, which has been mobilized between 2010 and 19. We'll talk about 2020 towards the end. About 600 enterprises, largely some form of innovation in business model, process, and so on and so forth. And essentially, our assessment is we've impacted upwards of 490 million people. So that's a broad sense. Let's move on to the next slide. But anyway, I think as the next slide is sort of getting loaded, let me just give you a perspective as to, and what the next slide is going to really show you is what is the amount of funding that's coming to the sector. Just go to the next slide. Yeah. So, I mean, this gives you a sense of how funding has come into this space. And as you can see, it was sort of moving along, ambling along between 2010 and 15, 16. But over the last 2-3 years, we've seen a rapid jump. Can we go back to the earlier slide? Yeah, we've seen a fairly rapid jump in funding. Overall, the CAGR of growth of assets which are moving towards impact enterprises is about 25%, $11 billion in about 600 social enterprises. And as I said earlier, the entire model is really one where you try to use early stage venture capital, de-risk these companies, and over a period of time, you try and crowd in commercial capital, pure play commercial capital to come in. And that's really what you're going to see in my next slide. So can we move to the next slide, please? So really here, if you see, and I'll talk about this slide, if you look at the two pie charts on the right side, you would see, seed and Series A and Series B and later, and you see three colors there. One is the impact, then you have the club deals, and then you have conventional PEVC. As you can see in the early stage transaction, which is more seed and more in seed than in Series A, pure funding by impact investors was almost 45%, 43, 44%. So by and large, a reasonable number of deals in the seed and Series A stage are being funded by impact investors. But as you move towards Series B and later, what we see is the pure impact kind of transactions tapers off from 43 almost by 50% to reach about 25%. And the non impact deals, which is pure play commercial transaction, the club deals becomes a large part. The same thing is shown in the bar chart on the left, which really showcases to you that if you look at three periods, 2010 to 12, 2013 to 15, 2016 to 19, if you look at 2010 to 12, almost 25% of transactions were coming through from impact funding. Today, that number is down to 18%, and the club deals as well as the the commercial funding of these kind of impact enterprises has increased substantially, which is really a part of what the impact investing ethos is all about. Also, is to de-risk and then try and crowd in commercial capital. That's really the story. I'll now, to sort of keep this thing moving, invite Aparna to speak on some of the other concepts before I sort of come in again and talk a little bit about a couple of sectors. Over to you, Aparna.
Thanks, Ramraj, for setting the stage. Meghna, if you can move to the next slide, please. Great. So one of the questions, as Ramraj also indicated, when we set out to write the report, was to say, what sectors is capital really flowing into? So no surprises over here. In the beginning of the decade, bulk of the capital was flowing into financial services, including, microfinance as well. But over the last 10 years, we've seen that change significantly. And you see bulk of the capital, so almost 60% of that is flowing into the real economy sectors like agri, health, Tech4Dev, which we come to later, how we define that, education. So, bulk of these, about 80% of the funding in the non-FS sectors has gone into these four. And we, like I mentioned, have seen a drastic change in sort of funding moving away from financial services. And we'll see some of this trend play out in 2020 as well when we cover that. Again, when we look at, financial services, FS, the pure play FS, microfinance, SME, as well as housing finance has received almost 90% of the funding within financial services. But we are seeing interesting models in InsurTech, etc., also come up, which are now starting to gain traction. Meghna, can you move to the next slide, please? Right. So the next, thing that we explored was really how is it that social enterprises are driving innovation. So as again, Ramraj alluded, broadly there are two buckets. One is around business model innovation, which happens, with innovation happening on the product side, the process side, and then the other is really the deep tech enabled innovation. So couple of interesting examples here that we looked at. When one talks about product innovation, just to make it clearer, is looking at mini grids, for example. How are you making electricity available at last mile? How are you, again, working on differentiating your product, making sure that you are having the right distribution lines go out right till the last household. When one looks at, process level innovation, you have models like NEPRA, for example, which is a waste management company that has really revolutionized how waste is collected from households or corporates. This is specifically dry waste and then processed to actually derive value from that. And the third bucket, as I mentioned, is deep tech, where you have models such as Miramai or Cropin, which are again leveraging technology, AI, ML, to really sort of analyze and look at problems which have been plaguing us for many, many years, and using technology as a way to solve for that in an affordable and accessible way. Again, impacting millions of beneficiaries over here. So this is a critical aspect that we analyze, as Ramraj mentioned. It's not just capital, but how are social enterprises really innovating to reach the last mile. We can move on to the next slide, please. Right, after this. Right. So the next thing that we explored was really, once we've seen where the capital has flown in terms of, sectors, in terms of who are the key funders, whether it's commercial or impact investors, we also wanted to analyze, what are really the SDGs that are getting impacted with the capital that's flowing in. While 11 billion may not seem a very large amount, we've seen outsized impact, so close to 500 million beneficiaries that are getting impacted by the capital that's flown in, both from commercial as well as impact investors. Now, obviously, we see that, we see this trend growing, and we see the impact, coming from the impact capital as well growing. Largely, we've seen, 50% of this need stemming from 3 SDGs, which is SDG 8 related to jobs and economic growth, SDG 11, which is sustainable cities, and SDG 5, which is gender equality. As you can see on the graph on the right as well, these are primarily some of the SDGs that are getting impacted, 11 totally, but of them, the 2 or 3 large SDGs that are getting impacted by the impact investments that have come in over the last decade are broadly in line with where we see the largest need as well. Can we move on to the next slide, please? Thanks. So here again, when we look at the number of beneficiaries impacted, of course, there may be some, overcounting here, because impact, where we stand today, there isn't a right or a wrong way to measure impact. Now we're seeing companies gradually adopt measures like IRIS or the impact management project, which is, getting globally accepted. In fact, even if one looks at what was being discussed in the last session that IVCA just held, people are talking about, measuring impact in a much more strategic way. So we're seeing those trends play out in India as well, but it's still very early days. So the 3 large issues that we really see with, impact management are around measurability, attribution, and actually having the right standards. So this is obviously work in progress. And as more LPs and more GPs align themselves to global practices in impact measurement and management, we'll see a lot more data emerging over here. At this point, most of what impact enterprises are measuring, or what GPs and LPs are requiring, is to measure impact in terms of the outreach and not so much in terms of depth. But as SEBI also sort of released the business responsibility and sustainable reporting standards, we'll probably see some consolidation happening around impact measurement and management as we go forward as well. Ramraj, I'll hand over to you to get us started on the sectors.
Thanks, Aparna. So I think Aparna has kind of given us a segue. Very importantly, she's given you a broad sense of the numbers. And as you can see, this is across. Can we just move to the next slide? I think this is across. And as she has rightly said, what we are able to measure today is really what is called as a breadth metric, just the number of people impacted. Ideally, to counter this, you should have something called a depth metric, which is really what is the proportion of impact that is created, right? And a lot of this analysis we have done using public impact reports of our members, some data from websites, talking to a whole host of these impact enterprises and so on and so forth. So much work needs to be done further in terms of being able to tangibilize the impact, but we did feel that this was a good beginning. Now what we're going to do is just give you a broad sense of some of the sectors and how the trends pan out, both from a capital perspective as well as from an impact perspective. Financial services has remained the mainstay of this particular space and continues to grow. I think if you look at it, it's got this nice upward sloping curve. Every year, growth has been quite good. Investments have grown at about 20%. They account for about half of the total capital deployed. The last couple of years have been a bit sad, actually, 2020 as well as 2021, primarily because a lot of the funding towards financial services is to serve low-income customers, and that's a space that is really struggling. So we are seeing a fair bit of a dip in terms of investments related to hardcore lending financial services, at least. Let's move on to the next slide. Okay. So essentially, what is it? We have about 155 to 160 impact enterprises offering a range of customized financial products, and we believe it's about 100 million individuals are impacted. Across the board, you have microfinance, SME finance. We've just given some examples here for everyone to understand what is the nature of some of these organizations. You have Ummeed, which is an affordable housing financial. Just stick with the earlier slide, please. Yeah, we have, can we just go to the earlier slide? Yeah, earlier slide. Yeah. So we have Ummeed, which is a affordable housing financier, which we have Ujjivan, it's a familiar name. It was funded originally by many leading impact investors. Kinara Capital is a familiar name. So that's a broad sense of it. But by and large, financial services has been the bedrock of impact investing in India, though it's changing quite rapidly. Let's move on to the next slide. Agriculture is again a sector that we are seeing, pretty good amount of interest. This is a space that, was actually sort of moving along and, not really growing, but again, has seen a sharp increase in interest. Can we just go to the next slide, Meghna? Has seen a sharp increase in interest. So in fact, I would say between 17 and 18 investments in agricultural investment sector has almost doubled. And even in a year like 2020, which was a fairly difficult year for the entire, economy as such, the drop-off in agri investments is not very material. It's just about 8-9% drop-off. So agriculture has been a sector which has seen a fairly sharp increase in uptick. And that sharp increase in the uptick is across subsectors of the economy. There are about 100 impact enterprises in this. And if the slides move, Meghna, I can showcase to them some of that. So can we move to the next slide? Okay. So while we are just getting that set up, let me just open up my own slides. And, while I know that you won't be able to see that, but broadly, if you look at agri, we have a variety of organizations there. We have companies in agri inputs and advisory, agri equipment, farm data management, market linkage, storage, food processing, dairy, agri finance. So it's a fairly large range of companies. And our estimate is that upwards of about, almost 18 million to 20 million farmers have been supported. As you can see, it's a range of organizations. I mean, the traditional sense is farm to customer is one of the big spaces, but today we see companies across, agri-finance, many of you would have heard of Samunnati. We have organizations in agri equipment, which is in things like cold chain facilities, EcoZen, agri inputs and advisory, market linkage is again an area. Storage again is a name or is a space that is known well. But by and large, about 100 agri enterprises covering about 20 million farmers is what is our estimate. That's the kind of story with financial services and agriculture. Aparna, over to you to cover the other couple of sectors that we have, health and education and so on. Sure.
Yeah, I'll probably just move quickly, just conscious of time. Thanks, Meghna. So similar story playing out in the healthcare space as well, where, investments right up till about 2017 were fairly laggard, but, 2018 onwards, we've seen big jumps, both in the healthcare space. And here, pharmacy as a subsector has really attracted the maximum amount of capital. Almost 50% of the deal flow that you see has gone into pharmacy, followed by secondary care. Again, here, the overarching trend of investments has largely been towards early stage investments. But when one looks at it when one cuts the data based on value, we've seen obviously almost 75% has been contributed towards late stage investments. So by volume, it's the early stage investments that are obviously seeing a lot of interest, both from commercial as well as impact investors. Meghna, can we move on to the next slide? Similarly over here, I think, names like 1MG and Afford Plan are now household names. We've seen them, heard about them very recently as well in the paper with the large funding rounds. Niramai, I talked about again, it's a company that's driving non-invasive breast cancer detection. So we're seeing a lot of innovation happening, to again put out affordable products or services out for, the last mile at the bottom of the pyramid customers here as well. Overall, when one looks at healthcare, we are seeing about 85 to 90 enterprises which have reached about 35 million people. A lot more of these details are available in the report, which are available on the IIC website. So right now, just due to constraints of time, we're just going to go through this fairly quickly. Education, again, has seen big jumps in 2018 and 19. We've seen, this sort of play out in 2020 as well, as digital education has picked up a lot of pace. And the pandemic has obviously provided more of an impetus to that. If we can move on to the next slide, please. The largest subsectors within education that have seen the most amount of traction have been test prep and the K through 10 segment. Again, like I mentioned, the pandemic has provided a boost. Names like Vedantu, Adda 24/7 that are providing test prep are all very, very common names in the household, which have north of sort of 5 to 10 million customers on each of these platforms. Varthana, that provides education financing, has been there for a while. It was seeded by impact investors such as the Dell Foundation and Omidyar, and now has obviously seen a lot more commercial interest with VCs such as Chris Capital, P firms like Chris Capital as well coming in. Meghna, if we can move on. The last segment that we looked at, since this enjoyed bulk of the investments, is what we call Tech4Dev. Now, this is more of a cross-cutting theme where we've looked at social enterprises that are either providing access to new markets, to new products, which we call utilitarian products. The next is access to new sources of income. So, enterprises that are providing or working in the future of workspace. We've seen enterprises in the SME tech space, which are providing access to connectivity, overall increasing productivity for SMEs. And then a very interesting space where we've seen a lot of companies, bringing out content and media in vernacular languages to, untapped or underserved populations as well. So those are the large, or broadly the 4 categories in which we evaluated Tech4Dev separately from the 4 sectors that we just talked about. If you can just move on. Yeah, so overall, when one looks at the investment trends, of course, it's been a bit erratic, but this is, one of those sectors, if we can call it that, or a theme that has seen, impacting almost 300 million consumers. We've obviously looked at, companies such as Reverie, which has now been acquired, again, providing a whole bunch of services to SMEs that are trying to service underbanked or underserved populations, reaching out to them with, different text and text tools, which, use local languages. So I think that's really been the broad theme over here. If we can move on to the next slide, please. And Ramraj, I'll hand over to you to quickly discuss the 2020 trends.
Yeah, I think, can we go to the next slide? Actually, I'll just summarize it. We are already running 3 minutes late. So I would say broadly 2020, because this earlier study finished in 19, but 2020, what's happened in 2020? First of all, by and large, I think volumes dipped somewhat compared to 2019. And the major reason for that was the big ticket, funding, especially in late stage financial inclusion related businesses, did see some impact, and we continue to see that impact in 2021 also in the first 5-6 months of the year. Second is, this is a big bang year for the education and education impact sector. We saw multiple large ticket deals, almost $660 million across 47 deals, online test prep, K-Tech kind of segments leading the way. Health is a sector where, there is always a view that this is a sector that should see substantial growth. Yes, this sector did see substantial growth, but it saw substantial growth in terms of seed stage investing. So we saw almost a doubling in terms of the number of seed stage investments. So overall volumes in terms of $1 million may not have increased substantially, but the number of new transactions that came in from a seed or a Series A, pre-Series A kind of funding almost doubled. The technology adoption and digitization is another theme that we saw across. Even in the financial inclusion space, we saw much more focus on digitization, areas like that. And across the board, I think obviously, because of the pandemic, adoption has really become tech adoption has become very central to most of these startups. And that's something that we saw. So overall, 2020 has been a good year, notwithstanding the challenges. And 2021 continues to remain active. We are also seeing in recent times a strong interest in climate finance related deals, equity deals, which are coming up in areas like sustainable agriculture, mobility, energy efficiency, waste to value. Some of these are new areas that are coming across, but overall, I think the active interest in this space is quite high. We are seeing several new players entering. And by and large, I would say in summary, I think this is an area that will continue to see substantial growth, substantial interest from investors, asset managers, as well as entrepreneurs. So with that, we end our presentation. Thank you all for this opportunity. It was wonderful being here and sharing some of our thoughts and perspectives on the data analytics that we were able to put together. Thanks a lot, guys, and apologies. I think we are 4-5 minutes late.
Yeah. Thanks, everyone.
Thank you very much.
Thank you so much, Ramraj. Thank you so much, Aparna, for next one. Thank you.